Prop trading firms invest their own capital to make profits rather than using their own clients' money in the traditional way like hedge funds or investment banks. In this video, I'm going to share with you 3 secret ways how prop firms make money. Hey, it's Frank Nagy and welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. If you're new here, subscribe to my channel and hit that like button. Proprietary trading occurs when financial firms such as investment banks, hedge funds, or brokerage firms choose to trade for market gain rather than seeking profits by trading for commissions on behalf of their clients. Now here are 3 secret ways how prop firms make money. Number 1. Profitable trades. Prop firms are not in the business to lose money with their capital. When successful traders close out winning trades, everybody wins. The prop firm splits the profits and pays out their traders. However, not all traders are successful. One way to hedge against losses, the Forex props will usually take the opposite side of their trades. By utilizing sophisticated financial management tools, the prop firm can analyze and assign those trades to separate accounts with their liquidity provider. This strategy limits the potential losses of inexperienced traders and will not affect the prop firm's margin account. Hiring a prop firm consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your prop firm. A good consultant will provide the financial management tools as well as make the appropriate introductions with liquidity providers, software vendors, and that will help your prop firm grow. Number 2, evaluation fees. Prop firm charges sign-up evaluation fees to candidate traders, which can range anywhere from $500 to $5,000 depending on the size of the capital they wish to trade with. On average, 85 to 90% of the traders that are participating in the evaluation will lose. And in most cases, the prop firm will retain the evaluation fees to fund successful traders while setting aside a portion of those earnings to offset any losses on losing trades. Now here's how prop firms make money on the evaluation fees. A potential trader signs up for an evaluation or demo challenge. They are taken to a screen where they will pay the prop firm for the challenge. After a quick due diligence, the trader is approved to start the evaluation. The trader then must meet certain conditions set by the prop firm to move to the next phase. Once the conditions are met and the participating trader gets funded, then he starts trading in a live account. The prop firm's software should also offer risk analytic functions to trade parameters such as maximum drawdowns, profit targets, and daily trading limits. Number 3, training and education fees. Some firms require the prop traders utilize education by taking advantage of their courses and by qualifying them in those phases. And the cost of these fees can range anywhere from $200 to $400 or more a month. Prop firm can structure a complete trading plan for the new traders as well as offer advanced training for more experienced traders. For the most part, prop traders can learn about trading through a demo account environment through the evaluation phase, and then the successful traders will then earn the opportunity to trade the capital. Hiring an experienced capital markets consultant like Frank Nagy Financial Services will help reduce the burden of setting up that prop firm. If you're thinking about starting a prop firm or a hedge fund, I recommend my ebook bundle, The Ultimate Hedge Fund Guide and Ultimate Prop Firm Guide. Click on the link below in the description box.